2026 DBC Finance Advanced class. Whenever you start DBC Finance by clicking on the icon, your last database should open up. If not, you can always click on Data File and you can go through and search for a prior database you've been working on. All right. So, because this is the advanced class, we will go through debt size fairly quickly, as well as a refund. And what we'll do is solve in a project finance, a multi-purpose deal. Multi-purpose deal or project finance module pretty much allows you to structure any type of deal. And in this case, we will follow somewhat along through the new money wraparound refund that is already set up in tutorials, which you can go through the program's help tutorials project finance. And so first we will set up new money, and then second we will set up refund, and then finally we will set up the project finance module in order to import the debt size new money and the refund case. If you know already going in when you're setting up your your different series, your different refundings, you can pretty much set up all but the bonds themselves, the bond structuring in the project finance. So if you know, for example, project funds, reserve funds, capitalized interest funds, ongoing expenses, especially if you know they're going to probably be calculated in aggregate or across multiple series and allocated in some way. But even if it's just calculated and allocated to a particular series, it's still a lot more user-friendly to create everything on the project finance level, except the bond component structuring themselves. If you don't know that going in, that's fine. As long as it's an icon, you can, copy or, cut and paste from a particular series into the project finance. So this was from our basic debt size refund training that occurred a week ago, Q2, 2026. But what I like to do is start from scratch, select the particular data file. I know it says issuers, but .df2, and I'm going to click new. And I'm going to just call this, let's say 26Q2ADV for advanced. All right. Q2 training. This kind of shows you if you want to make changes, you can always select, right click, or hit F5 key. Will pull up a menu. You can also scroll over and click on the particular option, like any other Windows-based program. Selected it and clicked edit. Just to kind of show you, but we'll go back to the advanced. So in this particular case, what we'd like to do, overall objective, is make sure. Okay. Okay. I don't know why it's saying one. Huh. Interesting. Okay. So, hmm, let me need to share. I don't think that really matters. So, um, going back to the advanced, our overall objective is to produce some kind of a saving structure, in this case, level savings. And then we want to wrap a new money series around it to produce an overall aggregate structuring, in this case, level aggregate debt service. So, what you need to do is create the different parts or the different series or the components that will be, that will make up this financing. All right. So, click on new. What I'll do is we'll start with the new money series. Click on that. We'll say 2026 new money by default proposed. Click OK. So, um, go to debt size assumption setup. This will obviously enter in our dated delivery first interest payment date. Let's just say this is on a 6/1, on a June 1st, 12/1/26, first interest payment date. Again, um, anything blue font color is information that's been manually typed in by the user. This is really important, especially if, for example, you're running the numbers and you do not, uh, let's say, see level debt service in the first period. A lot of times you can go into the bond component if some kind of an issue, some kind of a principal or par amount has been manually entered. uh, that will be the cause of the structuring not being level. So anything that's in blue font color is set in stone until it's unprotected or deleted in order to allow the program to solve, optimally. Let's see. All right. So cost of issuance, there's a lot of limitations to cost of issuance as well as underwriters discount. The problem happens to be it's very limited. It has to fit under one of these three criterias, for example. That's one issue. Another issue is when you click on OK, you don't see an icon. It doesn't matter if you type something in hard code some amount or some kind of percentage of par or some kind of, dollar per $1,000 par amount of par. You won't see it in the general area. And finally, if this is part of a financing, you can't just right click because it's not an icon and paste it into the financing. So what happens a lot of time is you'll create, series A, B, C, and D. You'll import it into the project finance, and then you'll want issuance expense to be calculated, let's say in aggregate across A, B, C, and D, and allocated either pro rata by par or by proceeds or, you know, to only a few. Well, basically, you have to go in and A, B, C, and D series and remove that issuance information you've hard coded, and then you have to paste it or start over and enter it in the financing. Um, if it's part of an icon, then you can easily copy paste. You can also save icons to what we call component gallery, which we'll get into. And that's almost like a blueprint. If you create something over and over and over, you can always retrieve it in any kind of data file, any issuer as need be. Create the bonds themselves. So let's just say serial bonds to, let's say 55. Update characters long for the short name goes automatically into. Another reason why it's always good to start from the top down, because when you type in data delivery, first interest payment date, even a fiscal period, you want to solve it, let's say on a, 6/30 or whatever it happens to be. Once you hard code that, the basic or the general dates automatically will populate each bond component that you create. So if you skip that first step, you have to manually hard code them in. Another problem is you hard code anything here. And again, that differs from debt size assumption setup dates. These will override. So sometimes that occurs. Someone will say, I don't understand why my interest is not being calculated from, you know, the dated or the delivery date I entered in debt size assumption setup. I immediately go into the bond component. And if it differs in here, that's the reason why. So it's always good to kind of start from the top down, so to speak. At the bottom, these are either going to be priced to the actual maturity, or if it's a term bond, it's going to be priced to the final maturity. So just because you label it or name it serial or tab, you know, also the default settings in DBC Finance are either industry standards or off of industry regs. What's most commonly created in the program. So we know a lot of times you are going to have to make or input a number of information. So it wouldn't make sense, for example, to have the default setting be, some kind of, cab serials or convertible cab or even a note. Right? So uh, anywhere in the program that you have any kind of questions, you can always hit the F1 key and it will open up help to that specific tab. You don't have to fish, you don't have to type in some kind of search name. If you wanted to know if it's 366 or off of 365 for actual, press F1, you'll see divided by 65, 365 or 366, depending on leap year or not. We also have an FAQ. These are legit frequently asked questions that we get from clients. And they can be very basic in nature or in setup or conceptually to fairly complex. So, just know that frequently asked questions are not all very difficult setups or very basic setup. It's basically what we would do is when we would have clients that would, uh, constantly ask the same questions over and over and over, we would write something up. And then in the next release, we would have it available. That way we can, steer client, or we would copy and paste. And if that helps them out, great. Or if additional support is needed, is needed. Finally, glossary. For example, we get a lot of times the lesser of test in a reserve fund. Somebody, will say, I'm calculating average annual debt service this way. Why is DBC giving me a different number, an amount? So we would typically, just to make sure to verify, say, well, here's how we match it, and here's, Here's the definition or the formula for it. I would say in the search, NLF, which stands for natural language format. And I would go to the NLF examples. These are just some of, but not all, examples of different types of expenses and how to enter in that information. And again, it can be from fairly basic to somewhat, complex. I would highly advise if-then statements, where there's multiple lines. Some are just one line of code. So that's something I would recommend quickly, just to show you that. So serial bonds, again, more times than not, clients generally are going to create serial bonds. So nothing is going to be changed in this tab. Maturity structure, enter dates to help you out. It's a much easier way. If you cancel, if you go out, go back in, again, right click or F5 key will pull up the menu. You can go back to enter dates and we can say 6/1/27, 6/1/55. Annual, if you wanted them semi-annual or you wanted them annual on the first business day of every June, you can make that change. You can also, if you have the dates already, let's say in an Excel, you can copy and paste into the maturity date column as well. And that goes for coupons, yields, price, and so forth. Now, again, if you already have the rates, the coupons, the yields, the price, you can hard code that in. For just example, just to show you, if you did have some kind of a pattern, you can, hard code in that rate, right click, copy down, and let's just say it's plus 0.0, 0225. The big takeaway here is, and again, you notice blue font color. The big takeaway here is to not, go in here. Oh, here. So you go in here and you wanted, some kind of a discount. And you type something like that. Now, what happens is when you calculate the series, or if this is part of a financing, like in this case it will be, you will get a warning message that will indicate to you, you protected for one or multiple maturities. You protected or you hard coded the rate, yield, and price. It's up to you to verify the reports to make sure the output is accurate. So it's not going to give you an error message, which means you can't calculate further. So we always recommend to one out of the three to, you can right click, unprotect, you can hit the delete key, and that will snap back to the appropriate, correct, in this case, price, calculated price. Average takedown per bond. In this case, we're going to have a global or some kind of an aggregated amount overall. The big thing is that if you enter an overall, let's say 5 per bond, average takedown across the whole series, and you do it per maturity, one does not override the other. Issuance denom by default in 5,000. You'll start to notice pretty much everywhere except itemized expenses, some kind of a specific, an amount, a draw amount that you want to hard code in or hard code some kind of, um, you know, balance requirement. Everywhere else, the amounts are going to be in thousands, minimum amount. These are important settings. But it's intentional that it's not on the main screen, that you do have to scroll. Only that it's not common, or you're most likely not going to be hard coding in information. Also, in advanced, unless you do some kind of a bunch of variable rate deals, most likely you will not be going in here very often. Um, so it's intentional. We know that you're going to have to be entering in a lot of information, and you know, uh, don't want to confuse anyone thinking that they need to, um, enter in everything that's shown. Now, this training is being performed on a laptop, and so depending on your monitor and monitor size, most of the time you're not going to see as much, all the way out to PPU date, for example, on the main screen. So, okay, click on the save button. You can notice that if you click on it, it's very, very quick. You can also do Control S, which will also save. So again, serial bonds, in this case, type in the maturity amounts, your coupons. These are going to be par, for example, in this particular financing. Save. Detail. Let's do a couple of term bonds. Term 60. The only thing difference is selecting the term bond. It's going to price to final maturity. And you can type, 6, you can type out 06/01/2056. You can, space, you can do dot, I believe, dash for the date, 6 dash, I believe, 1 dash. Um, and again, same as before, enter dates, annual. So going back here, again, just because we named it term doesn't mean it's going to know to price to the final maturity. Each term bond, unlike serial bonds, each term bond has to be in a separate bond component. Hmm? So by making the switch, it knows now this is not 5 serial bonds. This is one term bond that matures in 2060 with sinking fund payment dates starting in 2056. And I'm just going to put in 2 3/4. Just copy and paste. Because this is one term bond, rate, yield, price must be the same because this is being priced again to 6/1/2060. These are sinking fund payment dates. Click OK. And we'll do one more. 60. Let's see. And we'll do 66. Again, select term bond, 61, 61, 61, 66. Obviously, if you have more than, if you have 5 different term bonds, it'd be 5 different bond components. Say it's a little 3. Again, save or Control S will save it. This will have a project fund. In fact, yeah, we'll get to that in a moment. This will have a reserve fund, a capitalized interest fund, uh, issuance expenses. But knowing all that, and knowing this is part of a multi-purpose deal, I don't need to create it here and then, especially let's say for issuance expenses, you know, create even more work by going in, right clicking, cut, and then pasting. So I want to open up, and what we want to do is I want to actually edit. I'm going to put 250 million. Just give it us some kind of a specific amount. So we've kind of have the basics down for the new money series. Now what we'd like to do is create the refund, right? Because these are going to be 2 parts. So what makes up the refund? Well, as you know, and from the basic class, you got to set up the refunded bonds that need to be refunded. And then you also need to create the refund case, which by default will also incorporate or produce a proposed refunding shell that's linked to the refund case. That way, within the refund case, you can go into the proposed refunding series and you can enter in all the new assumptions for that. Right. And then overall, you're hoping to produce, in this case, level savings. So, what needs to be done first? In this case, let's create some refunded bond series. I'm going to go back. I'm going to select this issuer, the 26Q2 ADV. It's kind of important to note that as we went over in the basic class, especially in refunds, if you have a bunch of actual series and you're going to refund them, it needs to be all underneath that particular issuer. In this case, I can't create a refund case in this issuer and then select bonds to be refunded in this issuer. Now, there's easy ways. There's also an FAQ on it about, copying, a particular series within one of the issuers and then pasting or making a copy into another. But if you know that already going in, again, that's just more work that even if it's easy, that you don't necessarily need to do. So select this particular issue, click New Series, and let's just say it's I don't know, 2000, about a 2020 funded series. The difference, actual, this will not calculate it in a different way. This is merely for being able to select this particular series to be refunded. So when we do create the refund case and we go into the area to refund or select bonds to be refunded, the status cannot be proposed or proposed refunding. It just won't appear. So even if you forget this step, again, we can always go back, select, click edit, and give it the correct status in order to then be able to select it. So actual, click OK. I'm going to kind of follow the same thing. 6/1/2020. I would recommend hard coding all the information, meaning obviously a lot of these bonds are already retired. But for example, in cabs, if it's going to accrete from the original dated or original delivery date, you don't want to start, you know, in the 2020, you don't want to start putting in different dates, um, even if it creates a little bit more work. Just a just a heads up on that. So I'm going to go out to 60 on this, and I'm just going to create serial bonds. And the difference now is going to be obviously, here I'm going to put in 6/1, 21, 6/1/60. We are going to know what the issue amounts are. We're going to know what the coupons, yeah, if these are premiums, if they're discount. So you will type that in. But remember, I would leave either the yield or the price unprotected. Um, so in this case, let's just, you know, uh, again, you can copy and paste. If you already have that information in Excel, you can paste it, copy and paste. I'm just going to make this the same, let's say 80 million all the way down, 2 million a year. And let's just say this is 3.1, and then point one. If you wanted to, modify, right click, modify, and say, oh, I want to take off 0.01. You can also highlight just some of them and do that as well. Let's do something like this. Well, I have shown you these premiums. Again, because these are actual series, you will know this information, uh, and you'll just be able to hard code that in. Click OK, save. Call provisions, two-part process. Um, you know what? I'm going to actually create a term bond. So, I'm going to create a term bond here. Hmm. We could say whatever. It obviously just like in the serial, it's not going to be the same all the way down. But again, instead of me just kind of making up numbers, um, you know, I decided just for time, um, to just hard code in some kind of amount. But let's say it's, I'm going to put in plus, 175. Let's say it's 4 3/4. And let's say these are par. The big thing here is you're going to create probably multiple series, whether they're called or not called. There's a two-part process. One, create the call table. Two, link it to the bond component. You may have more than one call table, for example, different call provisions. Well, you could create those different call tables, and then If you don't link it, then none of the bonds are going to be called. Right. So let me just show you here. Call, and you put in your provisions here. It could be starting on this date at 102 or 101, and then the next date at par. In this case, I'm going to call 30 at par, 6/1/2000, 10 years out. Doing nothing, all the bonds are not going to be called on that date, because now we got to click on call provision setup. Let's say that these were non-callable. You wouldn't then link it, or you can select NA. In this case, we want to do call. Any dates, you have the option if that call date doesn't fall on an interest payment date or not. And then the number of days notice. I think this is important. Obviously, you look if in the OS it tells you it's a 30 days notice, you can type that in. Because what happens a lot of times is that the original call date might be, let's say, you know, um, let's say this was a different series. Let's say this was in 2015 and the call date was 6/1/25. Well, obviously, if we have a new refunding and the date of delivery is 6/1/26 and your call table is falls on that date or prior, then all the bonds, even if they're linked to the call table, they will on delivery be basically called. Um, and then you get into slugs. You need at least 30 days maturity from purchase. So it'll be a 100% cash escrow. And we get a lot of times, how come I'm not purchasing any slugs? Well, slugs need from the time that, from 6/1/26 or whatever that your general dates are to the requirement. Um, let's see. And so um, the requirement happens to be, on delivery. Well, that's not 30 days out. So if it's 30 days notice, 30 days notice. All right. So click OK, click save. So we've created one so far. And we just kind of the shell, the new money with the structuring. And we've created one actual series of bonds to be refunded. So let's see here. Let's create another one though, just to kind of show you. We'll click new. Let's say it's 2022. All right, 2022 refunded series, actual. And again, we'll kind of stick with the same theme. 6/1/22. One. I would say about the only, besides the bond components in an actual series, um, one of the few or only things that can automatically get transferred over is ongoing, refunded expenses. For example, like a BAB subsidy. And again, and there's an FAQ on it. You can automatically transfer that over. Now, there are some issues though. If it's a partial refunding, need to kind of create it a different way within the proposed refunding series, only because it a lot of times can take that full percentage of the bonds. It's just not as flexible. But if you have prior reserves in a 2020 or a 22, for example, it doesn't really, unless you want to, you don't need to create it here, only because those prior funds cannot automatically get transferred into the refund. You have to do that within the refund, which I'll show you how to do. And again, this is where we'll just go out to serial 66. Nothing there. 61. Ooh. And again, this is information that you'll have. Right. So again, I'm going to put 2 million, kind of like in that other series, and just make it 2 million all the way down. Rates, let's say it's, 3.25. That's probably a little bit more than that. Copy down, plus point. Oh, wow. Don't want to do that much. Here. Point. Let's see. Oh, yeah, do something like that. And again, you would hard code in, you know, kind of like on the other one, if you said, oh, this is, coupons 3.295, yields 3.3. Again, do not do something like this. Let the program auto-populate, auto-calculate the unprotected column out of these three. So typically, you'll probably hard code in the coupon in either the yield or the price column. Not all the time, but um, some of the time. So click OK. Again, call provisions. Set up a call tab because it's a two-part process, as we talked about. So 6132 at par, again, like the other one, but you have to go in and you need to link it. If there is a 30 days notice, 30 days notice. That, again, to reiterate, this means the minimum call date is 30 days from, well, in this case, our dated and delivery is going to be 6/1/2026, 30 days from there. So that will be the minimum. If you don't put that and the call table happens to fall on 6/1/2026 or earlier, then those bonds on delivery, you will see 100% cash escrow because slugs, again, needs 30 days from purchase to when they mature. Mature meaning the escrow requirements, meaning, the bonds, the bonds that are, um, that generate interest and also mature prior to those call dates and on those call dates. In this case, the call dates fall way past. It doesn't matter. But again, you'll see that a lot of times, especially on the OS, it'll say, put 30 days notice or this. I would just hard code that in. So you save that. So you may have many different refunded series. Uh, you would just, you know, enter those different actual series. Once you do all that, again, we'll go back here. Now we want to create the refund case, which also creates the proposed refunding series. It's a shell, so to speak, that we went over this in the basic class. Select, go new. Now we click refund. I say, okay. Little different look. Let me just close out these. I want to make sure these are saved. Now you'll notice when you create a refund case, the same short name will be created for the proposed refunding series. This, I think, is very important. It used to not be this way. Um, and then it was changed many years ago because you can imagine you could have, let's say, 30 different refund cases. And the old school method was, I believe, the short name of the proposed refunding series um, was not the same. So rightfully, clients are like, wait a minute, how do I know which proposed refunding? I have to go into the refund case, then from there go, create a lot more work. So, but as you can see, that was created for us. You see it already linked. So when we go in here, blank, and it's just like this new money series, so to speak. We'll put in the new provision. So we go in there. I'm going to do 6/1/26, and then oh, I don't want to do that. And then 12/1/26. Again, we'll wait on the issuance costs because we know this is part of a multi-purpose deal, project finance. And then we can go in here and start creating the different bonds, right? Serial, I could say, I think we are going out to, yeah, 66. So these are just going to be serial bonds. To here, and then 6. Make sure, yes. Okay. I'm going to start off 1. I want to make sure we are definitely um, 2, 5. Obviously, you'd be hard coding all that information in. Again, nothing new or different than the basic class. Save. And whether or not you have funds associated with this, expenses, again, we'll do that on the project finance level. I'm going to get out of there. So we put in our new provisions. How do we link? First, probably want to just start at the top, right? Refund assumption setup. It's general bond information or escrow information. By default, slugs, but you can make that change, whether it's cash, PV, open markets. What you'll want to do, and I'll get to that in a moment. Current slug solution parameters. Current doesn't automatically mean most recent today slug file is being used. Current means the most recent that's been downloaded and you are linked to that wherever it's downloaded. And how do you know? Tools preferences. Here, you can click on the dot, and determine, I would probably make a folder and you could then link it. And it depends on your firm. Some of them are like, no, it has to be directed to some kind of a shared drive. Well, make sure that you're using the right slug file. How do you know? Clicking on the down arrow. This tells me the quote current slug file that I'm linked to is June 3rd, 2026. Obviously, it's June 10th. So whenever you download, which is free, whenever you download slug file, it downloads it twice. One, it's going to, the exact date, 03 June, JUN 26, and then current dot. So current dot slug SLG, and then 03 JUN 26.slg. So that current dot SLG gets updated whenever you download a current instead of, say, a historical. So how do we know? We could go back here and go to SECS, say no. So that's why you should always check. because you don't assume. Now, when you run the numbers, you're going to see in the escrow reports the slug file being, it's going to show you at the bottom, here's the slug file, and you'll go, oh, but it's easier just to go in slug files. You can do current if you need to hard code some historic Genie match. I'm just going to do current, click OK. And now it's going to say 10 June 26.slug has been installed, right? Okay. Now when we go in here, now you'll see the 10 June 26. Now it's up to you whether to keep it on current or not. Obviously, if you go, no, I'm gonna select that. Well, let's say you're working on this, and then a couple of weeks from now, you come back to it, and you selected 10 June 26, and you're going, I don't understand why none of the escrow has changed. The rates for slugs have obviously changed. They're not the same. Why am I not getting any different? Well, you selected that specific. I think this is very helpful, especially if basically you want to lock this in. It's basically a done deal, only because every once in a while we will get a file sent to us from a client that says, hey, I needed to go back in here and recalculate just to print out reports, and I'm freaking out because all the reports are different. It's like, well, it's probably because you kept it on. First thing is I look at it and see if it's a refund. If it is, first thing I look for is I go in here and I go, it's you had it on current. So obviously new or different slug file rates is going to change your deposited, the escrow cost, right? Shows up sources and uses. That changes the par amount. Everything is going to change. So there's pluses and minuses of either selecting specific. I would say early on, if you know you're going to be running numbers and see what it looks like, and I can show you a sensitivity analysis in a bit. But just know, there's good. If you selected, that's great. Just know when you go back and there's a newer you or someone in your firm who downloads, you can do it every day. It's free. Just know when you go back in here, if I'd originally selected that and I'm going, a week later, how come nothing has changed? I need to know, oh, wait a minute. Yes, there are newer slug files, right? But it's hard, I selected this, so I need to either do current, and it will just automatically, whenever it gets downloaded, will use the newest slug file, or just come in here and go, no, I need to do the 10 June 26. So just kind of know that. Global proceeds escrow. This is if 100% is filled bond proceeds. Now, in this example, we are going to transfer a prior reserve fund. Whether you have that or you have some kind of set aside or you have some kind of issuer contribution, you have accrued interest, anything that you want to be a part of or be spent towards an escrow, that's obviously not going to be used with bond proceeds. So that overrides anything that's entered in here. So just kind of know, if I enter in cash here, it's not going to necessarily then, depending on what I do somewhere else, this will get ignored. And there's a warning message that will tell you that. And I'll show you momentarily. So escrow, general escrow information at the beginning. We went into the proposed refunding series, took care of that. How do we pull in the refunded? We click on detail, create. By default, we can come in. So again, if we had not selected actual series for the 2020 or the 2022, either one of those, if we had not selected actual series for the status, this would not appear. So you'd go, wait a minute, I created the 2020 and the 2022. How come they're not showing up? Again, you'd have to go get out of here, click on open, highlight, edit, change the status to actual, then they will appear. If you select, even if these bonds have, we hard coded in maturities that have already matured, um, that's fine. You don't need to deselect it. If you ever have specific maturities that either are not to be refunded, you can deselect. You can half, and you could say, 1 million. So it's fairly, if you know the amount. Now, I would say regardless, I would select it. And if you know that there's some kind of a percentage, if you say, God, what if I just want to refund 85%? Like, do I have to go in here and then type in, the 85% of 2 million? Do I have to do that for each one? No. You just highlight or shade in, click OK, then go into input bonds, go back, click import, says yes. And you can now see, here's the maximum amount to refund. You could go in here and type whatever amount you want. If you say no, it's 85% across the board times 0.85, or you may have it in Excel and you can paste it, copy and paste. So something like that. I would just say that if you make changes in here or everything's locked in, and then you go back in the 2020 or the 2022 series, and let's say the call dates change and you modify the call dates, but you don't do anything else in here, it's not going to automatically update. You have to either select import again, or you have to go in here and start hard coding in the new call dates. So that's sometimes, we'll get that. A client will just say, hey, I don't understand. I've my call date on here. I changed it to 6/1/2028. Why are all my bonds being called on 6/1/2030? Well, when you imported everything in, even though it doesn't show you, um, it will um, it will not. It's basically based because you imported off of a different call table date. So it's not automatically updated or automatically imports. Okay. So more times than not, though, you'll select the bonds, have it on select, and you select the bonds. This is where we have transfer. Like we had a 2020 DSF, right? And let's say it's 150,000. And you can also do, accrued interest. You can type in the percent, 100%. But in this case, just kind of focused on transferring prior reserves, set aside payment, some kind of an issuance contribution. You would just type in the description, the amount, and um, and that's about it. But a lot of times you're going to want to, or in this case, I want to actually spend this in a particular way, be applied towards escrow, right? And this will, obviously the reduce amount of bond proceeds needed because this will, and when you break out the escrow reports, you'll see it funded a particular way, depending on what you select. How do I do that? Well, I can just put, how about 2020 DSF? You can type in any kind of short name as long as you type in the same short name under escrow name in the escrows tab. Now, these may not be, may not be restricted to the R build. You may be able to, if you have a specified percent, you hard code. If it's not restricted, you type in NA. Now, obviously, solution option, these are not going to be filled with bond proceeds. How is it going to be spent? F1, we explain every type to you, or how the escrow is to be invested. And then common to debt service fund investors or select first accelerated. This tells you what is accelerated. Select first. Requires the same securities be used for all escrows. Total requirements funded by one escrow, one cost, and then it's carved up into individual escrows. So we'll get this a lot of times that, let's say the 8038, right? Form 8038 reports. And, you'll see bond proceeds used and you'll say, wait a minute, I want to reduce that by whatever you entered in on funds on hand. In this case, the 2020 DSF. How do I not include that? Well, it's going to be select first. And then it's going to be filled with remaining bond proceeds. Savings assumptions, again, any kind of changes in savings. By default, going back here, it's not going to be adjusted for the solution. It is going to show up in the savings applied towards savings. It will be upfront in the summary. If you wanted it to be as cash flow, that's in the PV savings. If, this matured in 66 and the rate was at some kind of a percentage, well, why don't we do this? We're gonna try this. So we are going to have it applied towards bond solution, and we're going to have it applied towards the savings cash flow. If you don't type in maturity date or interest rate, this will show up on, I believe, on delivery on the savings report, that first date in the cash flow section. If you just type in 6/1/66 without a rate, then it will release that 150,000 on 6/1/66, or whatever maturity date you entered in. But this, just to show you, this does generate some kind of interest earnings. Okay, and then we'll have a new one that we'll create. Right. So, okay. Reporting options, footnotes, alternate text, solution assumption setup. Level just strictly means level debt service, right? So it ignores the refunded debt when structuring. Most of the time, if you want, well, I would say normally it's going to be probably uniform. If you want level savings, it will be set to uniform. If it's, I want, and I'll do this as to kind of show you different ways to structure. But sometimes you may have, I want, maximum savings for certain years. And then, I want savings on the back end to be zero. Or I want zero savings in the first couple of years, then I want level savings. That could be a mixed solution. Deferred is backloaded, upfront savings, accelerated front load, backload savings. Again, F1 goes into, if this is a refunding, this is how it's structured versus debt size. So save that. Make sure we get this. Actual series. All right. Now, went through all the parts here. We had the actual bonds linked with the proposed refunding, everything in the refund, and then the new money. So now let's go to the financing. I just say new money wrap. All right, so it goes right into, you'll see the bridge here, but nothing has been imported. We click add, we can select. So it's proposed series as well as refunds. Master series is really no, this was kind of a old method, old way of solving expenses, funds, some other things. But once, and this many, many years ago, but once universal components, universal bond solutions was added, this really became obsolete and or at least obsolete probably 99.99% of the time. Can't remove it because, if I have clients that entered or have information in their master series allocations, the last thing we want is for them to open up project finance and it's gone. So in this case, though, we want the refund and we select a uniform. We want level savings, hopefully, and then overall level aggregate debt service. It's You have to create a universal bond solution for that. Click create. I just want the new money. Now, if I selected both, that means they're both going to be solved off of whatever solution type's entered here. But again, we don't want level aggregate debt service, disregard the savings, right? No, we want the savings to be structured, and dependent on that, will hopefully determine if we can overall level aggregate debt service. So, size globally, generally, or what happens is we have contingent, it's basically similar to the contingency group settings, which is finance component, whether or not you want to share additional proceeds, with one another to produce some kind of a aggregated rounding amount less than a bond, if possible. And but before I would jump to additional debt service for wrapping, and we're going to pull in or select the refund. Now, you may have on top of that other debt service that's part of the new money that you could create, just like the basic class showed you how to do that on the wrap example. We can select that, you could select that. But in this case, if you just select, and same thing, if the refund had some kind of other or existing, and that could be unrefunded debt service, you would make that change. Again, F1 key, we go, I don't know which is which. So, unrefunded bonds, so other debt service and a refund, either unrefunded and a partial refunding, or bond debt service defined in debt size as other debt service screen. Existing debt service could be something like, I believe, like if you put in some kind of an additional, some kind of a cash flow within the refund. So, but we don't have unrefunded debt. But if we did, you'd make something like that. If it's a partial refunding and you want to include that in the overall structure, because when you view an aggregate debt service report, by default, it will show unrefunded debt if there's any. So now there's ways to not show it, to not include it, and that would be quickly in the refund, down here. Include debt service of the unrefunded bonds, include unrefunded interest from the refunded bonds. So, but in this case, trying to stick with the tutorial, um, overall level aggregate wrap around refund. Hopefully we can produce something like that. Now, it's not, in this case, we are going to create a new reserve fund and we're going to create, say, cap I. So just kind of like this, uh, you know, universal bond solution report is you'll notice series selection, bond solution, solution adjustments, additional. It's the same thing if you're within a series in this section, pretty much. Okay. So this obviously anything that's selected here, for example, if I went in here and I don't know, I went in here and I added some kind of a screen entry, you know, or I made, for revenues, or I made changes here. Once you put the new money in the series selection tab, that overrides. So, if I had entered in revenue constraints in the new money, and I had, this was you can say like a fill, and I put revenue constraints in here. Once you go in here and put it here, it ignores. It's not going to do fill. You have to do it here. You have to do so. Just kind of remember that as well. Now, in that case, you can just easily make the change. You can copy and paste the revenues. Um, so we are going to adjust, hopefully, give us some kind of level um, net aggregate, and I'll pull up a report for that as well. So I believe that's a hidden report um, in the samples folder, wherever DBC was installed. It's typically, program files, DBC folder, then finance folder, samples folder. You'll be able to, through tools, define custom reports, pull in, the all-in TIC proof, aggregate net debt service report, and so forth. Okay. So we got that down. Now let's start creating our issuance expense, and again, if we, you know, if you had gone in here and hard coded all this information, and then you're emailing, help email data to DBC, you email us going, how do I copy and paste or cut and paste? You can't from there, unfortunately. Um, you then have to kind of start from scratch. Now, if it's an icon, you can right click, cut, paste it in here. Um, Insurance expense. This is actually going to be, we're going to select, instead of just a one typical expense, issuance expense. Now you'll kind of see this cost of issuance underwriters discount tab. The good thing about this is A, you see it obviously. B, you have a lot more flexibility. It doesn't have to fall under one of those three criterias. So I'm going to paste this. So it could be 5 per bond. It could be some kind of an amount, or of bond. Total. Or you can link other formulas to it. So let's see, 2.5 per bond, and then 1 per bond. No. And I would say anywhere, if you click on, you give some examples. It's not limited to that. It's just there's no way we could put every possible formula. And again, F1 NLF, search for that, for those types, examples. I'm just going to put in one cost of issuance, and you can create multiple because sometimes you may have, um, some kind of, uh, you know, inclusion or exclusion, let's say in a taxable tail, where you say, I don't want to include this in the 2% limit. Well, you may create a separate itemized underwriter's discount or cost of issuance. I'm going to put 250,000. What's really good about this, and this goes for any other series, if kind of see it most helpful on especially if you have, itemized expenses. So like in this case, I'll create, um, let's see, let's say to the COI. This is an itemized. And again, like the other, you can select, deselect, um, by default, embed, and we'll get to that in a moment. But here it's going to be cost of issuance, and I'm going to size to excess proceeds. I think we're going to need, though, to embed because each series produces or not, its own rounding. Um, and then we will do a 2000, a 250 million. Um, you just do new money. Now, obviously, when we go in here, it's not going to be calculated in aggregate and then allocated pro rata to each. It's going to be just to the new money. And then I'm just going to hard code in. I'm not going to put in specific draws. In this case, to remember in thousands, except itemized expenses, 250. And then cap I. Mhm. This happens a lot. Keep it allocated to be calculated in aggregate, then allocate pro rata and run the numbers. You'll view the net debt service report and you'll see a general fund only because it's not capitalizing each series interest at 100%. It's calculating interest aggregately through that date at 100%, and then it's allocating pro rata. So that's not always going to match up to its own interest amount. If it doesn't match up and you have excess monies in one series and you don't tell where to go, a general fund is created. It's going to be net, and we'll say bond or bond interest accrued through, let's say 5/1, 27. And then we'll have a reserve. We are going to calculate this in aggregate and allocate. The difference is obviously we're going to have a cap I that's going to take care of interest, 100% of it through 5/1/27. If interest earnings are generated from 6/1/26 to 5/1/27, which it will, you'll have interest earnings. Where is that going to get applied? Can't get applied towards debt service during that period. Cap I takes care of interest 100%. So again, a general fund will be created unless you tell where it needs to go. It can be to the project fund, to another, another type of fund, or cap I. And you'll see whatever shows up, you know, the short name. So in this case, we're going to apply it towards cap I, and then we're going to draw down debt service. Whether or not you want to, and it can, you may have, in this case, the new money and refund have different maturity dates. And you'll go, look, I want it all to be released on a particular maturity date. That's when you would hard code in here. If you don't, it will release per series final maturity date. Again, you hard code it in here, and then later on you change, you add, you remove whatever that final maturity date happens to be. If that changes and you don't change here, it's not going to assume you also want to change when the reserve fund gets released. So you may go, I don't understand why, I typed in 6/1/66, or, how come it's being released on that date, but, or you may forget that and go, I don't understand, my final maturity date was in 65. Why is this getting released a year later? Well, if you hard code it, you're saying, this is when it gets released. Whether or not it makes sense or not, it doesn't matter. So, especially early on, leave it blank and you make changes, it'll adjust accordingly. I'm going to do maximum annual aggregate debt service. You can do the lesser of, 10% of aggregate par, 10, maximum annual aggregate, 125% of average annual aggregate debt service. Actually, it'd be annual debt service. You can add that as well. So in this case, I'm going to put in maximum. Well, I just do, I can do, no, we'll just keep it at that. Maximum annual aggregate debt service. Keep it easy. So, and you just, continue if you have ongoing expenses, more itemized expenses, multiple funds, project funds, and we'll get to a moment, some other stuff. So save that. I like to just personally get, I want to, make, okay. It's up to you whether or not you like to have multiple things open. So if I calculate one or more refunded bonds mature on or before delivery date, remember, because we hard coded bonds, starting in 20 and 22. Yep. The global proceeds escrow, that's a refund assumption setup, global proceeds escrow tab. Remember, we were saying as soon as you type in anything in that prior icon, funds on hand, that escrows tab, that overrides anything. It's telling you, and that's fine. So warning messages don't necessarily mean you did something wrong. It's giving you a heads up, hey, you may or may not have entered information here. And I want to see what's going on here. This can happen a lot of times in reserve funds, especially when reserve funds are part of the solution. So the best way to handle it is have it calculate through the next to last maturity. So the problem is if it's part of the solution, then it's circular in nature. So in this case, through 6/1/65. Let's see if that makes it a little bit better. There we go. Didn't time out. Perfect. So, summary of bonds, sources and uses of funds. let's see. I think I'm seeing a lot of these. Net. I want to go in. Let me just make sure I don't. I may not have it. No, pull up. Define customs reports. I want to import aggregate net debt service. Okay. Okay, so savings, refund savings, and then I'm going to put escrow information. And we also want not only that, but we want the bond solution, right? And universal bond solution. I want to actually put that. It's fine. Yeah. If you like in a particular order, you can obviously know how to modify anything that's. I would say when you're verifying, you probably don't want to modify it to annual just so you can each cash flow. You can. It's a better indicator on talking about just verification, trying to tie out numbers. But this is with the assumption everything is fine. Escrow cost, I want to do alt detail because I'd like to break out and see the that prior debt service fund broken out with bond proceeds. Um, Save all this. You can, I can say, 26 Q2, check finance. Um, so if I delete it, I go into another project finance and another issuer or another data file, I can load that in. Now, what I would like to do here, just to show you, um, is I want to pull up. So we have that. We have pricing, price. Okay, just to kind of show you whether you're going to have some reports in aggregate and some you're going to want, um, specified per series. Let me just make sure. Available reports. Yeah, fonts and graphics. Okay. Yep. And then it's by series. Yes, let's see if that does it. Yeah. So you can see, and and this occurs quite a bit. Someone will send us their file. How do I, make that change? Well, you got to make sure you've got two things where you want, all the breakdown aggregate reports shown first, and then you want to break it out per series or per component within a financing. How do you do that? Well, just go to print, preferences, set print table of contents yes under project finance. Make sure it's under, because I think the default's by report. Do click group by series. That way, um, and this is kind of generally what is asked, or what you're going to want is, broken out, shown aggregate, and then per series. So whenever you've seen a report like this, if this is an indication, probably 99% of the time, this was run in a financing. Um, there's a a calc agent model that they may have, but most likely that's not the case. Calc It's through project finance, but you'll see, universal component of the oh, because I didn't give it a long name. That's the reserve fund. Um, I just kind of kept it as is. So as you can see it, yeah. Let me just put debt service reserve fund. Edit. There we go. Now, since I gave it a different name, now when we run it, um, obviously, print preferences, any particular tab, you can make changes, add. Yeah, now you'll see it. Reserve, cap I. Remember the additional proceeds. I want to fund, um, and we can group those together as well. You can group by long name, you can group by short name. Again, how do I group those together? Go to print preferences, sources, and uses tab, and you can see, link, basically, um, group. Believe that it's by short name is the default. You do by long name, make sure the long name is the same with different short name icons. So um, now it has to be cost of issuance. It can't be, can't group that with the project fund. But you'll see the 250 million. And if everything works out, it's great. Here's the bond pricing. We've seen the bond pricing report, bond statistics, universal bond solution. Now this is showing us debt service adjustments. So this is quite a bit of stuff. Debt service adjustments is going to be the refund debt service. It's also going to be the um, earnings, interest earnings of the reserve and the release and the draws um, of the cap I. We also have that debt service fund, but you can see the 16 million five and change. So that's why it's real important to view the solution reports. In this case, universal bond solution, this is showing us level aggregate net debt service 16 million and change, 16.520 within a bond. But if you don't set it up right and you don't view this report, again, net debt service, aggregate net debt service, aggregate, that's just reporting whatever the debt is. That's not really showing you what's included, what's not. So if we had not included, the reserve fund, the, refund, forgot to select that, you wouldn't see that as existing debt service is the reserve fund. I'm sorry, is the refund debt service. So if that's gone, you'll go, oh, wait a minute. I didn't include the refund debt service to solve aggregate. It's not including it. Viewing the aggregate debt service, net debt, aggregate net debt, that's not going to, it's going to show it, but it, it's not going to be level. So it doesn't answer that question. Debt service adjustments. This is from, cap I debt service reserve fund that's adjusted. Net debt service. So 16 point. This is a little different because this is just the net debt service, right? It's not incorporating, and I'll show you. Um, oh, I think I know why that is. 1616. It's not, it's not including the release of, I don't think it is. I'll have to see what that, let's see, 13.3. What is that? Okay, cap I, right? 13.3. Okay, proposed. I'll have to see. Aggregate, yeah, the 20. 16. I think the difference is that 4. It's not including this, and I'll have to look at that, why that is. But that's just a reporting because these are custom reports, so something is not included. But as you can see here, just viewing the aggregate debt service is not going to do it. Usually the net debt service will. You know what? I think it's because, hold on. That's why I bet. We're not solving aggregate refund portion on a net. That was just overall as a net. So, okay. Now it changes, yeah. 16.1. So before we didn't include for the refund, it wasn't solving net savings, level net savings. 16.15. No, no, yeah, that's correct. The aggregate. There we go. Aggregate net debt service, 16.105. So that does match up with the aggregate solution. So that's correct. So as you can see, aggregate debt service, obviously, it's just showing you the debt service. It's not netting out, right? The reserve fund. It's not netting out the cap I draws. It's not, and that's prior debt service fund included and the new fund. So again, it's a custom report. But a lot of times clients don't know about the customer report. So how do you know? Um, you got to view the universal bond solution report. Savings. That's probably, let's see, why is that not? I bet it's because it is being applied. Where is the bond? Oh, I think it's probably because it's, that's fine. The escrow requirements, the bonds that mature before and then the maturity dates. This happens a lot of times, the rollover. How do we not do that? So let's do something here. A lot of times you may not want, and I'm going to select no. How do we do that? I'm going to go in here. I'm going to do proportional. A lot of times proportional, it will eliminate if possible. Okay. I'm going to try to not have it. There we go. Yeah, 16.105 net debt service. Okay, that's right. Savings still is there. Okay, there we go. The descriptions, escrow cash flow, sufficiency. But where's the cost? Escrow cost. Wait a minute. 1 second here. Yeah, escrow cost. Oh, let me just do by report. It's easier to view it in the order instead of grouping them. There we go. Bond solution. So see, yeah, it's that adjustment of that 3 point. Let me see. Yes, reserve and also up front. I have to look at that. So this is giving us 2.45 savings, right? Okay, let me go to the savings, 2.45. So is it because I think the reserve fund, let's see. All right, trying to see if we can get, where's the savings? So we got refunding, refunded. There's something that's not being included in the savings. I want to make sure. Oh, I know what it is. I know what it is. Okay. It's the reserve fund. Cash flow to maturity. Yes. There we go. Okay. And that's an FAQ as well. Um, it was the new reserve fund that had not been net. So there's a savings and a solution side. And so while the solution looked good, the savings, it was not netting it out. So now you'll see bond solution, that's the refund, 2.485 million, within a bond, unused revenues, that's in essence savings because it's a difference between refunded debt and the refunding debt. Overall, 16.15, net debt service, aggregate net. Yep. Savings, 2.485. Now everything is included. Perfect. Right? Savings, that's the end of it. Requirements. But I wanted to, when I modified, you'll see alt detail. This will show the slug purchased for the reserve fund and then for it broken out for the fill with main bond proceeds and as well as their yields. And that can also be viewed on the escrow statistics report, which you'll see here. Right. Now, overall, you may have certain, um, I think that's good. So, that is in essence new money wraparound refund to produce level aggregate net debt service. Also, the refund is solving a level net savings. Right? What is it netting? It is netting, the release of the prior debt service fund, debt service reserve fund, and cap I. Right. So that's kind of all the parts to that. Uh, what I'd like to do is take a until about 12:30, about a 12-15 minute break. So back at 12:30, I will pause this and then we'll pick it right back up. Just pause this and then be back at 12:30. I'm actually not going to stop this. I'll just either let it run and then come back to it in about yeah, in about 10-12 minutes. All right. Okay, well, um, I think that's going to conclude today's project finance um, advanced class, and tried to make it um, as detailed as possible. But this is again how to create new money uh, series with a refunding where we want level net savings and wrap. Um, I would say if we wanted to show you, in this case, let's say overall, we wanted, some kind of, um, I don't know. I think this is a great way to uh, wrap up and conclude this particular setup. And hopefully you got something out of it. Hopefully there weren't too many delays. And, any other issues, please make comments, like, subscribe, especially if you're a client. That way, when other files get released or videos get released, uh, you will be notified. Um, Obviously, if some of your colleagues were not able to uh, make it today and instead are watching, you can also let them know. I will, um, send this to you guys. Um, I would say, by the end of the week at latest. Uh, will depend on, I think the most important thing is just getting it available. It may not look as pretty, might not be edited as professionally, but I think the crux of this is, just kind of learning the different parts, learning where to put in the information. And you know, I it's just another tool, especially on a video, that you can have access to. And but if you haven't, you should. Tutorials, project finance, video tutorials. Um, that's not linked to the YouTube channel, but project finance. Uh, you know, this is a lot fewer pages only because it assumes you know how to create debt size, a new money, you know how to create a refund. And while we have the inputs for that, we don't, it's not like debt size and refund where it kind of handholds you step by step. It pretty much focuses when it starts on the project finance level. Okay, well, I hope everyone got some good information from this, and um, definitely, you can go to help, training requests. We have other um, signups available if you missed it. And after going over the this YouTube video, you still need help, let us know. And as always, you can always in your file go to help, email data to DBC, put in your not your information, what the situation is, send it to us, and we will take a look at it. Thanks everyone for showing up, and see you later.